Laurence Balanco, Global Technical Analyst with CLSA, joins us. And Laurence, good morning. Thank you for joining us. How are the Nifty formations looking to you? You've put out a recent note and that tone of that note is quite bullish.
Yeah, I mean, bullish chart formation on the Nifty, as you mentioned. What we've seen, the market essentially consolidate for roughly 2 years, and we've recently broken out of that trading range to new highs. We've seen both our momentum and breadth indicators confirm those highs. So our initial target's around the 10,300 area, but they do stretch ultimately up to the 12,000 mark. So all in all, a bullish picture. Short term, if we do see pullbacks from the current overbought conditions, we'd look at that as a buying opportunity for the market working towards those targets over the coming months.
All right, Laurence, in the near term, if you're indeed talking of a pullback, then how much can the pullback be?
It should be fairly limited. I mean, it might be a time-based correction. What I mean by that is that we spend the next 1 to 2 months consolidating above this breakout area. But I think it should be fairly mild. Basically, a 5 to 7% correction would see us pull back to the breakout points, and that won't break any of the technical structures or the breakouts that we've seen.
And beyond the pullback, how are the longer-term charts looking?
Well, very constructive. I mean, I think one point that you need to look at India is relative to the regional markets and then relative to the globe. So if you look at those relative charts in dollar terms, India has corrected over the past 12 to 18 months and most recently broken those downtrends. So I think from those longer term trends, we can see India outperform both global markets and other emerging markets in dollar terms. And then the absolute chart, which we mentioned earlier, you've broken out to new all-time highs after a 2-year consolidation pattern. This is not too dissimilar to the breakout that we saw in 2010 when the market set up to record its first high from that breakout. So I think on the longer-term scale, we're talking about a 12,000 upside target and the longer-term uptrend of the 2004 lows essentially resuming.
How much time period are we talking about, the targets which you've set?
Sure. So, I mean, the 10,300 area, we think we can do that by year end, early next year. The 12,000 target, we're talking on an 18-month to 24-month basis. So that's a sort of time horizon that we think this can play out in.
Right. And, the rupee has displayed huge strength as well, almost 5% gain from the start of the year till now. So what's the trend looking like there?
Yeah, so if you look at the Indian rupee chart, very interesting. You've had this formation where you formed a double top. We broke down from that double top, and that's been the trigger for rupee strength. And we've got a downside target of 62 against the US dollar. I mean, if you look globally, recently the dollar index has fallen back into its old trading range that we saw through 2015. That's essentially been driven by euro strength. But more broadly, in the emerging market aspect, the Indian rupee is one of the stronger emerging market currencies, that with the Taiwan dollar and Korean won. So it fits into the stronger part of the emerging market currencies, and we still see it strengthening towards the 62 area.
Now, beyond the Nifty, we've also looked at Indian stocks and sectors. What are your thoughts there?
Yeah, so I'll talk about sectors just more broadly. I'll leave the stock calls for our fundamental guys. But if you look at what's been important in driving sustained breakouts in the Nifty itself, the banks index is very important, not only from a weighting perspective, but I think just as a broader indication of the economy. And the banks index, like the Nifty itself, has broken out of this 2-year consolidation pattern. It's been leading the market higher. So I think that's a very constructive sign. And the sector most recently just adding upside momentum is the fast-moving consumer goods. And that's been driven by two of the biggest stocks within that sector. But banks most importantly, and if you're looking at a recent breakout and positive chart setup, it's the fast-moving consumer goods.
Now, one of the last Dow and the S&P is in an eight-year bull run. You don't think any meaningful correction there is overdue now?
Yeah, so it's the second longest bull market without a 20% correction if you look at the S&P or the Dow data. So it is a mature bull market. what we've seen is the highs that you made in March of 2,400 for the S&P. That's actually been confirmed by momentum indicators and breadth indicators, and we've done some work on what an important market top looks like. And typically before you get to a major top, you start to see momentum slowing, you start to see breadth deteriorating, so less and less stocks drive the index higher, and we haven't seen that process start. So while it is a mature trend, we haven't seen the typical signs of getting close to that, and that's probably months away. So I think into the summer and the fall is we probably see higher equity markets, but come the end of the summer, fall, I'd be looking for signs of any deteriorating momentum or breadth. We're just not seeing it yet. So the backdrop would be, yes, a mature uptrend in the US, but that trend is still intact.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.